Hey now, I'm going to share with you a high win rate, very profitable, complete trading system, test it 100 times in a row, and share the results. And all I ask for is that you crush that subscribe button during the 1.5 second intro, right now. The system I'm going to test uses 4 indicators. The first indicator is the SSL channel by Erwin Beckers. This is set to the Fibonacci number 21 period, and the colors kept at default. We are going to use this indicator as our trigger. The second indicator is the Wata-Atar Explosion version 2 study by Shay Ankam. All settings and colors are kept at default. This indicator measures volume and will be used for trigger confirmation. The third indicator is the ATR bands by Alexander TH, set to 2 times ATR and colored in white. We are going to use this for our stop loss level. The fourth and final indicator is the 200 EMA, colored in orange. We are going to use this for our trend direction. This chart is US yen 30-minute candles. On my test, the rules for a long entry are: we're going to look for a price above the 200 EMA. Second, a cross up in the SSL channel. And finally, a green bar on the Wata-Atar indicator to be above both the explosion and deadlines. All of that happens on this candle here. That is our trigger candle. We place our stop at 2 times the ATR. We're going to risk 1-to-1 for half our position. When that is hit, we are going to move our stop to break even and let the other half ride until the next SSL channel cross. When the SSL channel crosses, we close our position, and you can see this risk to reward ratio of our second position at fruition is 1.72. Make sure you stay tuned until the end because I'm going to show you the gain on account for this system of taking profits and what will happen if we use a 1-to-1 risk to reward ratio for our entire entry position. You'll find the numbers very interesting. And now we'll flip to shorts. This is what I will test for shorts. Price to be below the 200 EMA. An SSL channel cross down. A red Wata-Atar bar that closes above the explosion and dead zone lines. All of that happens on this bar right here. We put our stop at 2 times the ATR, which is this line on the ATR bands indicator. Our first target is 1-to-1 for half our position. When our first target is hit, we move the other half of our position to break even and keep it open until it either stops out or there is another cross of the SSL channel. So this one hits a risk reward of 4.21 when we close our position at the cross of the SSL. Be sure to stick around to the end of the video where I'm going to give you the results of this test and my thoughts on making this strategy better. And now it's time to do what I do. It makes sense to subscribe and enable notifications so you know when our next installment is released. Now let's review the test data and go over a couple of ideas on how to optimize this system. So this test was done on US yen using 30-minute candles, risking half our position at a 1-to-1 and the other half at a variable take profit level. Most wins in a row was a great 11 and most losses was 4. Total target 1 gains was 24% and target 2 was 41%. Of the 100 trades, we had a 74% winning percentage and the total gain on account was 65.2, risking 1% per trade over a period of about 7 months. The equity curve on here actually starts out in the drawdown, followed by a consolidation period, and then it's straight up like a rocket ship from there. Those impulsive moves up are due in large part to the variable take profit system. So you're going to get a lot of trades that stop out at break even on that second half position. But when you hit those second position trades on the SSL cross, you really start to grow the account. So now let's take a look at what would have happened if we just did 100% of our position at a 1-to-1 risk reward. And we would have had the same winning percentage, But as you can see, the gain on account is significantly less when we do a 1-to-1 risk to reward ratio. But it still is a winning system because the hit rate on this is so high. You can see the equity curve when you trade this 1-to-1 is a lot more angular, and that is due to the consistency of the 1-to-1 risk reward. Whereas with the other system, you're taking your second position at variable profit level. So you're going to have an equity curve that varies much greater than when you have a consistent risk to reward ratio. How do we find the crumbs to optimize and make this system better? The first thing I would test is not necessarily adding another indicator, but playing around with the take profit levels. For example, instead of taking profits at the next SSL cross, maybe you can add a 50 EMA and have your stop trail at the 50 EMA level. Or you could target 2-to-1 for the second half of your position. You must go through the optimization process and make sure you are eating all the crumbs that the system has to offer. The second thing you could do is add a trend continuation feature to the system. For example, you could use hidden divergence of another indicator, or you could simply look at market structure. For example, is there a series of higher highs or lower lows? Or is price moving in a choppy range? This is a bit more subjective, but really when you look at it, a chart is very easy to recognize when the market is moving in a trend. With a trend following system like this, it is always best to wait for entry when the market is clearly moving in one direction. What would you do to make this better? Let me know in the comments, and maybe I can make a follow-up video. And be sure to let me know if you have any questions, comments, concerns, or video ideas. Bye for now.